All right, I'm just going to give this a shot here today. I'm just going to talk about, I just wanted to go along and just, hey, what's going on? I just wanted to go quick. I know a lot of people wonder about like how to underwrite an investment property. And I figured I'd just go through the way that I do it. So I'm on the MLS here. So you don't have this search, but this is just as easy to get the data from, I don't know, call me if you want MLS access, or you can just use Zillow, etc. So I'm actually going to pull up a duplex here in Waconia that hasn't been selling. And you can see why it hasn't been selling when we get done with this, and you'll see that. Okay, so I just pulled up the temporarily not available for showing listings. This means that it's not actively on the market. They've withdrawn it, but it's still in the MLS here. So you can see the days on market. We've had 111 days on market, so it's not selling. It's a duplex up and down. And let's look at the numbers, because this is kind of ambiguous. It doesn't really make much sense if you just look at this. Should I buy it? Shouldn't I buy it? Based on the rents, right? So the rents in here, and they have the lower level rented at $995, and the upper level is at $1,020. So right about $2K per month. So let's just input this into my spreadsheet that I've shared over here, and I'll show you exactly how it breaks down. And we'll look at the purchase price, and then we can actually mess these numbers and find out where it's a good buy and how we could make this deal work. And potentially. So we're just going to put it in as they've listed it for sale. So we're going to do the purchase price here at 400K. Cost to make rent ready. I think reasonably, if you're to do this like bare minimum, just putting carpet and paint, you can spend 15,000. Okay. Closing costs, you're gonna right now, man, you're gonna be at least, let's go 3%. 25% down is gonna be minimum right now. Just quarterly yesterday, I got 7.625, but that's going to be a little extra closing costs. So this might actually be low. But I think 3% is probably fine. And let's say that we got some, we'll put so this is broken down where this spreadsheet will work up to 8 units. So I just put all the units in here up to 8, right? So we have 2 units here. One was at 1,020, I think. The other one was at what, 995? Yep, 995. We'll put that in, we'll zero out the rest of it. So our total income per month is going to be this 2015. Vacancy 3%. If you're an active landlord, I mean, this is probably low. You're going to at least probably lose a month per year. So let's crank this up to 7%. That's probably okay. Now it's a full house. You want to use at least 10% capex. Now this is going to be low because this is under rented, right? So 10% capex is taking 10% of the gross income. Okay, so at $2,200, you're probably going to be spending more than that. So at these numbers, let's burn that up to 5K. So we do 20% capex. That's just because these rents are too low. Okay, we'll adjust that later if we mess with it. Let's say that we're just using our own cash. We're not using a line of credit, so we're going to make sure this zeroes out. All right, management. I'm self-managing. Okay. Seconds. Insurance, it's probably going to be about 3K. Let's see what your insurance is. 3,400. 3,440. And honestly, I'd like to run this at 4K just to get it up to 1%. This tax is a couple of years old, and it's based on the old purchase prices. So if we're going to do 1% of the 400K, I think that's probably reasonable to crank it up to 4,000. So I add that in there. So you can see that the inputs are really easy to do. You just add them in: purchase price, interest rate, term, rents, everything like that. And you can find out. And then over here, it spits out what's actually going to happen. Okay. So right now, if we bought this at 400,000 with 25% down, with rates that are probably active with, and this is in investment rates, right? If you're buying this for your primary residence, you're probably closer to 6 right now. Okay. So I'm just running this at investment rates. You're going to be losing about $1,000 a month in cash flow. You're going to be, that money that you put in here, which is 127,000, is going to be losing 11.5%. Okay, so obviously that's not going to be a buy at this point. And this is what they're offering right now, is they're actually offering losing 11% of your money, okay, to hold the asset. So what you would need to do in order for this to be losing money on a cash flow basis is you have to have some pretty extreme appreciation expectations, which you absolutely do not have. in this location. So this isn't going to work. We need this to positively cash flow so we can mess with these numbers here. Okay. A couple of things we can do. First and foremost, let's look at purchase price. People think this is a lot more powerful than it is. So let's just do that. Let's cut up 100K. Okay. You'd think that chopping up 100K, people would think that would make a huge difference. You're still losing 6.5%. Crazy, right? What really matters is the cash in your pocket. That's what's going to matter. So let's put this back to it. This is probably market value for the property. It's probably 350. Okay. Now our rents are under rented. So what is this? It's a 2-bedroom and a 2-bedroom. You can probably get for a 2-bedroom right now. It's a little bit depressed. You're probably going to God, I bet you can get 1,500 on average. Okay. So we get that up to 3,000. Now we're going to want to mess with this. We'll bring this back down to 10%. Okay. 4,000. I think that's probably fine. Now at 350, if you can get your rents up to 1,500 each, you're starting to positive cash flow. Okay. But this is tight. I got to adjust this. So you're barely breaking even, right? So 350 with 3K a month cash flows. You're running a break-even business. Okay, you're making about 280 bucks a month, fully rented. Okay, or if you take into account your vacancies and your maintenance capex, you're making $836 per year if you hit these perfectly. Okay, that's probably a little bit too rough. In order to make this really work, we're probably going to have to mess with our. This is going to get worse. Let's just see what happens here. What do we put 50% down? So you put 50% down. Hold on, let's get rid of this. Making 4%, now you're making 900 bucks a month or $8,000 a year. Okay, so that's really weak for the amount of money you're putting into this, but it's probably okay considering the broader market right now that you'd be, making 4% holding onto the asset. So maybe, if you're willing to put down 200K into this property, and if you could get it down for 350, this might be something that you could move on right now if you had to put your money to work. But honestly, you can get 4% in just buying treasury bonds right now. So that's dicey, right? You probably want to outperform that. So maybe 300. Sure, 300 at 50% down. $1,000 a month, 6%. That might make sense. So put 175K into it. This is a pretty aggressive interest rate. So if you do primary, this probably would work. Okay, work-ish if you really had to have it. But you can see that they're offering me 400, very far away from where an investor would purchase it. Now let's look at this from a house hacking perspective. I think that's worthwhile too, right? So what if you were going to just, live in half of it, then rent out the other half? You're probably going to get a 6% rate. Okay, let's do 6.125 just to be safe. House hacking means that you rent one of the spaces and you live in the other, and that other renter helps you bring your cost of living down. Okay, so let's run this again at 400. You're still going to need to fix it up, okay? Because you're going to live in there, but you're going to lose the other rent. Okay, so let's say you get 1,500 for the side, and vacancy. We can probably drop that down because you're only dealing with one. Let's go 5% on that. It's not going to be enough. Let's go back to 7%. Maintenance capex still going to cost you money to hold it, so we're going to run that up to 20. Okay. Cost of owning a house. Don't forget this. It's going to be expensive. It's not cheap. Let's go back to 25% down. Insurance, 3K, taxes 4K. That's smart. All right. So now at 400, it's still going to cost you 1,200 bucks a month. Okay. But what that would have cost you without the renter is 2,400. Okay. So you can see that's the power of house hacking, where you're not necessarily positively cash flowing. That's probably not going to happen, but you can get a lot of help to hold on to an asset that's worth a lot more money. Now, I absolutely would not pay 400 for this, right? You just would not. Maybe you'd get it in for 350, because obviously the market after 100 and 111 days here saying it is not worth that. So we'd still have to work on that price. So let's say that you got it for 350, put a tenant in half of it for 1,500. Now your cost per month is $900 to hold on to a 350K duplex. That's starting to make sense, right? Right. Instead of $2,100 a month, right? That's pretty good. So you can see the power of house hacking, especially if you're just starting your journey or investing in life, your first house. I think house hacking is a really, really good option. This would actually fit into house hacking better than it would just as an investment property. So that's how to do it. If you guys have any questions, please like, comment, subscribe, DM me. There's also a link to set up a consultation with me if you'd like to go over this stuff. I think house hacking is a brilliant idea, and I also think buying investments is good, but they're tougher to underwrite, as you guys can see here. So it's best to get good at doing this now than it is to when things turn around and be starting from square one. Why wouldn't you just learn now? Might as well. Those last numbers were wrong. It's actually 957. I just found this. Excuse me. Thanks, guys. Hope you enjoyed this. Bye-bye.